welcome to another video. In this video, we are going to learn about ratios. The first ratio would be debt to equity ratio. I won't be talking about debt to equity ratio in this video because I have spoken about it in the previous video. There would be a tab given above which you can click and go to that video. The first ratio that we are going to talk about in this video would be return on equity. Return on equity is given by the formula net income by average shareholders equity. You can find net income in the income statement and shareholders equity in the balance sheet, but you do not really have to take out your calculator and calculate the values. You'll probably find ROE ratios over the internet without really doing much work. An ideal ROE would be greater than or equal to 15%. If the company has an average ROE of lesser than 15%, it's better to avoid that stock, because if a company is giving around 7 to 8% return, instead of putting your money into that company, you can probably put your money in some debt instrument which would have way lesser risk than equity. And if you're putting your money into equity, make sure that you are getting a good return on equity. The next ratio that we are going to talk about is return on capital employed, or ROCE. ROCE is given by the formula EBIT by capital employed, where capital employed is equal to total assets minus current liabilities. Again, you do not have to calculate ROCE by taking out these numbers. You will get this value somewhere in the internet, and I'll show you as an example by the end of this video. Ideal ROCE would also be more than or equal to 15%. The next ratio is price to earnings ratio, or PE ratio. P ratio is given by the formula market value per share by earnings per share. Next would be price to book ratio, or PB ratio. PB ratio is given by the formula market value per share by book value per share, where book value is equal to total assets minus total liabilities by number of shares outstanding. PE ratio and PB ratio are valuation ratios, which sort of tells you if the company is overvalued or undervalued. So let's take an example where we will look into these ratios. For checking ROCE and ROE, I prefer this website called screener.in. Let's take an example of a share, Asian Paints. If you see, Asian Paints has an ROE of 28.2% and ROCE of 33.8%, which is really very good. For P and PB ratio, I prefer ticker tape again. Let's type Asian Paints. P ratio of Asian Paints is 84.27 and PB ratio is 21.64. How do we know these are good numbers? P ratio and PB ratio does not really have anything called as ideal numbers or benchmarks. What you can do is you can compare it with sector PE and the sector PB. The sector PE is an average PE of all the companies in that particular sector. So in this case, the paints sector, and similar goes for PB. So if you see here, P ratio of Asian Paints is 84.27 compared to 29.37 of the sector, and PB ratio is to 21.64 compared to 2.62, which basically means that Asian Paints is very highly valued compared to its sector. But should this refrain you from investing into the company? Not really. Another school of thought says that if a company has high PE and high PB ratio compared to its sector PE and sector PB, it also means that the company is performing really good compared to its competitors, and the expectations of this company is way higher than the other companies in the sector. And if you look into the fundamentals of Asian Paints, it would justify this fact, because as you saw, it has really high ROCE and ROE. If you also check into the financials, the EBIT, PBIT, net income, everything is increasing every year. If you check out the balance sheet, the total assets has been increasing and it is significantly lower than the total liabilities. And Asian Paints is the sector leader in the paint segment. It has almost negligible debt and there are very low chances of Asian Paints going down. So this definitely has very strong fundamentals, And even though the P ratio and PB ratio are way higher than the sector PE and the sector PB ratios, it sort of justifies that fact because the fundamentals are very strong of Asian Paints. With this, we'll come to the end of this video and also end of fundamental analysis. Thank you for watching till here. I will see you in the next video. Take care. Cheers. Bye.